Welcome. Welcome back to another episode of AI Literate Citizen. Last month, we reviewed part one of UBI, user-based insurance, and how UBI is changing the auto industry. Auto insurance is undergoing one of its most significant transformations in decades, and it's all powered by data. Usage-based insurance, or UBI, promises a fair pricing by tracking how and when and where we drive. This means that you could have lower premiums and safer roads, but for others, this raises serious questions. How much of our personal data should insurers collect? Who really owns that data? And what happens when the policy ends? Does the data disappear or does it live on forever? Last month, in part one of two, we explored the promises and pitfalls of UBI. We started with the definition of UBI, how it works, and listed the 8 US companies that support it, along with pros and cons. Today, we're going to continue that discussion in part two. Part two is a deeper dive into the telematics and how algorithms are being built for usage-based insurance. We're going to go into the data usage and where that data is being stored and how that data is affecting you during and after the policy. And what questions should consumers be asking before they opt in for UBI? We'll also go into the future of UBI. Where is this headed? If we continue down this road with telematics, what is the next step for personalizing, or in this case, hyper-personalizing user-based premium insurances? And then finally, we'll conclude with, if this technology continues, how can this technology be used in other areas of the industry? Sit back because this part two is packed with a lot of information. We'll take it slow, and you can always press pause. How do the AI algorithms that are built for usage-based insurances work? The AI behind UBI is designed to analyze driving behavior, assess risk, and personalize premiums. These algorithms use a mix of machine learning, telematics data, and actuarial models. They predict accident probabilities and then price those policies according specifically to you. So let's start with how those AI models are trained, built, and deployed. Number one, data collection. This is the foundation of all AI models. UBI relies on telematics and sensor data that's collected from, depending on the type of device you're using, OBD-2 devices. These are the plug-in devices that plug into your vehicle and record the acceleration, braking, and speed. The mobile app, a smartphone-based UBI that can track your movements using GPS and accelerometers. And then the connected cars, the cars that are most recent out on the market. And these have built-in systems. At the moment, that could be Tesla, Ford, or GM that directly transmit driving data from your vehicle to your insurance carrier. Now, these connected cars are disabled until you opt in with that insurance carrier and then enable that feature in your vehicle. But all three of these collect key data points: speed and acceleration patterns, so sudden acceleration or excessive speeding, braking and cornering. This would be harsh braking events or very aggressive turns. Mileage and frequency driving, so more time on the road would increase your risk exposure. Time of day. If you're driving at night, that's typically riskier than driving during the daytime. And the location data. If you're driving in high traffic or accident prones, where, according to the actuarial data, more accidents and people died in that particular location. All of this raw data is clean, pre-processed, clustered, and fed into AI models for analysis. Number two, feature engineering, identifying risk indicators. Not all collected data is useful. So feature engineering involves selecting and transforming the raw data into these meaningful inputs that is used into that AI model. So common AI features for UBI algorithms: event frequency. How often does the driver brake or accelerate suddenly? Your driving score. This is a weighted index based on your driving habits and based on the safety metrics. Contextual factors, weather conditions, road type. Are you highway? Are you urban? Is it traffic congestion? Are you driving during the day when there's high traffic? This could be in the morning or in the evening after work. So the AI model learns to associate these features with the accident risk probabilities, helping the auto insurers personalize that pricing back to you accordingly. Number three, the machine learning models. This is how risk is predicted. UBI systems use machine learning algorithms to analyze your driving data and estimate the likelihood of accidents. So, a couple of the most commonly used AI models in these scenarios for UBI are one, supervised learning models. For example, logistic regression. This predicts the accident risk based on the driving behavior scores. Gradient boosting machines, or GBM. This enhances the prediction accuracy by weighting risky behaviors. Neural networks. This would detect hidden patterns in large data sets for complex risk modeling. Number two, unsupervised learning models. This would be clustering, K-means or DB scans. This groups drivers into risk categories based on behaviors. And then we also have anomaly detection, autoencoders, isolation forest. These flags unusual driving events that may indicate fraud or extreme risk. Number three, deep learning and neural networks. These recurrent neural networks, or RNNs, are used to model driving patterns over time. And the convolutional neural networks, or CNNs, they can analyze video feeds from your dash cams for additional risk assessments. But all of these models continuously improve, learning from the new data and refining those predictions over time. So let's now shift focus to risk scoring and pricing adjustments. UBI programs rely on AI models to analyze your driving habits, but these systems have built-in biases. For example, urban drivers may be unfairly penalized due to frequent stops and starts. If you're an urban driver, you're taking more shorter drives. For me, I use the phone, the mobile phone. I've been using it and researching this for over 6 months. And I've noticed that when I drive locally, very short drives, 1 mile here, 3, 4 miles there, and I do this over a series of days, my driving score, which is visible to me as a percentage, is then reduced. So I can slowly see that it goes down. But yet, when I'm driving more long distances, say 45 minutes to a soccer tournament or an hour and a half to a soccer tournament, then I've noticed that my percentage or my score goes up. Another bias, the younger drivers. If that driver is young or under the age of 25, you may face higher premiums even if their driving is safe due to data models based on general demographics. The other is harsh braking events. Now, this can be completely misinterpreted, even if it's for necessary safety reasons. For example, avoiding an accident. Maybe a soccer ball unexpectedly comes out into the middle of the neighborhood and you slam on the brakes because you see a child running after the soccer ball. While you were avoiding an accident, which is a good thing, the system is only recognizing that you created a harsh braking event. Now, I have noticed in my mobile app that probably 3 times now, it has asked me if I had just gotten into an accident. And it was a pretty shock because I had not gotten to an accident, nor did I do a harsh braking event. But for some reason, the app asked me if I had gotten into an accident and wanted to call the police. So luckily, there was a yes or no in the app. And I said, no, I was not in an accident. And then we move forward. But I thought that was pretty interesting. So, since insurance rarely disclose how their algorithms are interpreting this data, consumers lack transparency on how their premiums are really getting calculated. So, what about the potential for always on surveillance? Some UBI programs use mobile apps, which is the one that I've been using, that requires location tracking data at all times, even if the driver is not driving. I have noticed that. For example, when I'm in my vehicle, my phone comes with me, and in that case, it's evaluating me as the driver. But I also recognize that when I'm in another car and I am the passenger, because I have that app turned on, it also recognizes that I'm driving the vehicle and will score me accordingly. Now, in the app, I have the ability to go into that driving event and say, I was the passenger. But this still raises concern about constant surveillance, even during personal or non driving activities. Battery drain and device performance issues. So I do notice that there is a little bit of a battery drain on my phone, but not necessarily too much more than any other app that may be constantly running in the background. And then device performance of issues. If I'm using my mobile app, is there any performance issues because these apps are often running in the background? And then family member tracking. So some of these programs collect data from all users in the vehicle, which could raise ethical concerns. Now, I can tell you that the app that I'm using doesn't do that. It only recognizes me as the driver. What about discrimination and unequal access? So, UBI programs may not be equally beneficial for all consumers. For example, low income drivers who can't afford a newer vehicle may be at a disadvantage, as some UBI devices only work with the modern automotive systems. Drivers with disabilities or special needs may exhibit driving behaviors that don't align with the UBI algorithms, leading to higher cost. I know a girl in my neighborhood who has photosynthesis epilepsy. Now, she already has a lot of hurdles that she needs to overcome before she can get her permit and driving license. But if she was to use UBI in the future, her driving habits, because that's not the data that's been pushed into this application, could be biased and recognize that she is doing things that are not against the norm. Now, that could be rectified over time as individuals like her with and other disabilities begin to drive. This data gets collected, and over time, that data now becomes the retrospective and historical data that's maintaining and improving these algorithms. Other discrimination and unequal access could be the difference between a rural and an urban driver, someone in the city or someone who lives more out in the country. This may have the rates different for each of these individuals due to the road conditions and traffic patterns rather than actual safety risks. And finally, let's focus on future use of UBI data for credit or employment decisions. Long-term concern is that UBI data could eventually be used outside of insurance agencies. For example, could your employer request your driving data as a part of its background check and hiring decisions? Specifically, the use case I could think of would be a trucker. If I've got my trucking driving license, which is my CDL license, my commercial driving license, and I go to apply for a company where I'm hauling, if I'd been using this data, could they request the driving data as a part of this background check before they accept me as a driver? What if financial institutions could incorporate your driving behavior into your credit score? That would affect loans and mortgages. And then additionally, government agencies, could they collect and use the driving data to influence public policy, such as road usage taxes? I mean, in the end, who truly controls the data? The biggest underlying concern is lack of consumer control. While UBI programs could, again, offer savings, they do expand the corporate and government access to personal driving habits. Without clear regulations and consumer rights over data usage, this could evolve from an incentive-based model to continuous surveillance that could impact far more than just your car insurance premiums. So let's shift focus to data usage. So, beyond those immediate concerns of privacy, security, and transparency, there are other major concerns around the data usage for UBI. This could include data sharing with third parties. Who else has access to the driving data? Some auto insurers could share or sell the data to advertising companies, law enforcement agencies who may request the driving data during investigations, or other insurance companies that could impact your future coverage on premiums if you decided to shift from one carrier to another. And then auto manufacturers who may request the data for future product development. So even if the insurer claims that they don't sell your data, you've got to read the fine print in terms of service, which may allow them to use their data for certain uses beyond what you expect. What if the data was used in legal proceedings? So UBI could potentially be used against you in court. For example, if you're in an accident claim, could the insurer deny coverage based on speeding or aggressive behavior because they detected it in the telematics data? What if you're a criminal cases or cases that go up to the court? Law enforcement, could they subpoena driving records to establish a pattern of reckless behavior? And stretching it a bit far, but what about divorce or custody disputes? Could the location tracking data be used as evidence against you in court? Or in a custody dispute, could that data be used to reflect your driving behavior as a claim against you that you're unsafe or unfit? Overall, we have a lack of control over that data after cancellation. So once we cancel the UBI program, there is no clear process for how that data is being deleted. An insurer could retain that data for regulatory compliance, which could be a few months or even years. Internal analytics, they keep the data for themselves to continuously refine the pricing models, or for future marketing or underwriting decisions if you decide to come back to that same insurer. Now, I do have the mobile app and I did read the terms and conditions. It took me about a week. There was quite a lot. But I do know that once I cancel my policy, specifically, I could keep the policy with the insurer, but cancel this particular option for the UBI insurance. Once I cancel it, my data is being held for 10 more years after I cancel the program. And then lastly, what about the UBI scores? We'd mentioned it briefly that the data over time could provide a numerical representation of your risk levels. So this could be as common as low risk, moderate risk, or high risk drivers. If you're low risk, you're considered safe and you receive the maximum amount of discounts and perhaps even lower premiums. If you're a moderate risk driver or standard average across all drivers, you're paying the standard rates and may or may not receive minor adjustments. But if you were considered a high risk driver, you could face higher premiums every 6 months when it renews, potential restrictions, or they could claim that your policy is canceled. And these scores are translated into the pricing models combined with the predictive analytics and the actuarial tables. What about ethical and technical challenges? So we've mentioned that there could be some algorithmic bias. Younger drivers could receive higher scores. The AI models could misinterpret that harsh braking. If you live in the city, you could be unfairly penalized because of frequent stop and go traffic. But what about other concerns like privacy and data risks? So the UBI requires constant data collection, which could raise surveillance concerns. But there's also transparency concerns. So most of the auto insurers don't disclose exactly how their AI models are calculating risk. That transparency is not visible to us. Consumers could not challenge the UBI score even if we felt it was based on flawed data. And those AI models could change over time, which may lead to unexpected premium hikes. So, what do you need to know before opting in for UBI? Well, you have to read the fine print. You might want to spend the next couple weekends reading the terms and conditions. But In reading those terms and conditions, be mindful of how that data is being collected and how it's being used. How long is that data being stored after cancellation? Can you request the data be deleted after you decide to decline the program? Will the driving data be shared with third parties while you're using the program? But will the driving data be shared with third parties after you've canceled the program? And exactly how does that driving score impact the premium? And is there an option or a path to dispute the inaccuracies and escalation? So while there could be financial incentives for safer driving, it also comes with significant data risks. Consumers need to weigh the lower premiums and hyper personalized pricing against the potential downside of constant monitoring, data retention, and potential cybersecurity vulnerabilities. But overall, the question remains, is this savings worth the long term data risks? So, where are we headed? What's the future of UBI? So, as auto insurers collect more granular data and the industry shifts from mileage based pricing to real time risk assessment models, will this offer hyper personalized driving, pricing, safer driving incentives? But we also think that there are some still ethical, regulatory, and technical challenges that exist. So, what if we move from hyper personalization to hyper personalization? For example, moving away from the telematics pricing data and integrating AI behavioral analytics into those programs. So drivers could, in the future, see real-time premium adjustments based on their daily driving habits instead of looking at driving habits over a 6-month period. Biometric integration. So we do know that in the auto industry, there are automotive companies now looking to integrate eye movement tracking and driver fatigue monitoring into the windshields. If the driver looked like they were falling asleep, then that driver fatigue monitoring would recognize it and then warn you, similar to how we experience the lane assist or the blind spot detection. But could that biometric data that we know is going to be in the future, could that be used also to evaluate and hyper personalize your insurance premium? So these AI models could misinterpret this driving behavior, and then that could lead to unfair rate increases. But what if we take this even further? So if we expand the pay per use and subscription based models, so the traditional premium, we evaluate it every 6 months, could leave and go away to on demand insurance where consumers only pay when they drive. So I think that's really interesting. So what would that look like? A pay per mile policy where there is a company called Metro Mile that is starting to test this out, where the model expands with more precise real time tracking. So you only pay for how many miles you drive. What about a short term flexible coverage where drivers could opt out for temporary insurance packages because of specific trips or timeframes? So, for example, I know that during this next trip, I'm going to be driving 1,000 miles. I may decide to increase my insurance during that time frame. And then when I'm done with my trip 2 weeks later, I then opt out and decrease that insurance package. We always talk about Netflix. So, what if there's a Netflix style car insurance program, a subscription based model where the insurance could allow the consumer to bundle driving coverage with other things like vehicle maintenance, roadside assistance, or other insurances, other services? Think of this as right now, I could be using my UBI insurance, my auto insurance with my company, but I also have AAA for roadside assistance. It is possible that these two could merge under one, And the car insurance now could bundle that. So instead of me paying AAA separately and paying my auto insurance separately, the two are bundled and I get a larger discount for both. Now, insurers, they could use the model and introduce a higher per mile rate, which would make the cost unpredictable. And looking at our bias, drivers in the rural areas or those with long commutes, drivers in rural areas or those with long commutes could be at a disadvantage. But as technology increases, the integration of autonomous and connected vehicles, as self driving technology advances, UBI could be used to also evolve its assess risk differently. So, what would that look like? A hybrid UBI model. Insurers could analyze both your driving behavior and your vehicle automation performance. OEM insurance partnerships, automakers could partner with insurers to offer built-in insurance based on the vehicle data. So a company like Ford could work with a company like Progressive, and based on the vehicle data that they're sharing, along with your driving data from, say, that phone, it would adjust your insurance premiums. And what about IoT and smart road integration? Insurers, the rates could be influenced by real time road conditions, for example, the traffic patterns or external environmental factors. Are you driving during a hurricane? If that's true, then that data could be used against you and cause an insurance increase. So, if insurance companies can gain full access to not only your driving data, but also the vehicle data, do drivers lose control over how they're being rated? And then the liability could shift from the driver to the vehicle manufacturer or the software provider. So this raises a lot of issues between the auto industry and the auto insurance industry. Now, what about regulatory challenges or consumer protection concerns? As insurers, auto insurers collect more personal data, government could likely introduce stricter regulations to protect consumer rights. So, what would that look like? Data ownership laws? Future regulations could force insurers to disclose data usage policies and offer more opt out options before sharing data. That would be nice. Anti discrimination policies. AI driven UBI models could face legal scrutiny if they disproportionately penalize certain demographics. Data portability rights. A driver could demand the ability to transfer their telematics between insurers to ensure fair competition. But there's pros and cons. Insurance companies can lobby against these stricter regulations and argue that the data restrictions could reduce the risk assessment accuracy. And then global discrepancies in data laws could make cross border UBI policies difficult to standardize. For example, I know that my insurance rates are different in the state of Maryland than they were in the state of New York with the same insurance provider. And what if this could expand beyond the auto insurance company? What if UBI concepts spread to other types of insurance and financial services? What would that look like? UBI for health insurance? Safe driving habits could be linked to health insurance discounts, reward the drivers who exercise caution on the road. Credit score integration, banks and lenders could factor driving behavior into loan eligibility and interest rates. And then if we look at the smart mobility ecosystems, UBI could be integrated into the ride sharing, your car rental, and other urban mobility platforms, which could offer insurance as a service. Now, pros and cons, this has a lot of overreach. If insurers combine driving data with personal data, like your health or your finance, it could create a whole new form of digital surveillance capitalism. And I would expect a consumer backlash. People can reject the excessive data tracking, which would lead to pushing a privacy first insurance alternative. So, to sum up, where is the future of UBI? So, we've discussed real time premium adjustments. AI powered systems could dynamically adjust per day or based on per trips, rewarding those cautious drivers immediately. Biometrics and in cabin monitoring. So, we've discussed that AI can analyze eye movements, facial recognition, and fatigue detection to determine your driver alertness and adjust your premiums accordingly. And then in the future, some insurers could use blockchain to ensure transparency and driver control over their own personal data. But this is really a double edged sword. AI powered UBI can offer accurate pricing, safer roads, fraud detection, and prevention, but it also still comes with major ethical concerns around privacy, bias, and transparency. Consumers should be demanding for fairer AI models, clearer policies on data usage, and more control over their personal driving data. The next decade, we are going to see a major shift in user based insurance. Insurance will become more personalized, more dynamic, and more data driven. And these advancements come with significant concerns about privacy, fairness, and long term consumer control over your personal data. So, the future, if we strike the right balance, the future of UBI should emphasize transparency in data collection and pricing models, should implement strong data protection laws to prevent misuse, should offer consumers control over their data, including opting out and data deletion rights, should ensure fairness in AI driven models to prevent discrimination or bias. Whether UBI continues to be used as a tool for smarter insurance or becomes the gateway to constant digital surveillance, this depends on how AI regulators and insurers and consumers will shape its future. So, is the future of ABI innovation or outreach? Are the savings worth the long term data risks? That concludes our episode for today. Thanks for joining. See you next time.